Basically, I think the major reason or the major influence right now is probably US dollar strength. So the dollar's been very strong of late. Obviously, ECB looking to print even overnight. Some weakness in sterling with the sort of question marks over the Scottish independence vote. So that sort of dollar strength is really leading to a bit of nervousness towards the precious metal market and gold in particular. So it's not surprising to see gold pretty soft over the last few days. I think as long as we see this sort of dollar strength, and I think gold's going to be under some pressure. The two are the sort of obvious. Gold's the obvious anti-dollar play. So whilst people are looking to park money in the dollar, I think that gold is going to remain under some pressure. Question mark, of course, is how long that dollar strength is going to last for. I don't think that the US economy really wants to see a much stronger dollar. So I think it's a temporary sort of strength in the dollar. I don't think it'll be permanent. But look, if you were to compare our numbers to what occurred in 2013, then not only ABC Bullion, but certainly across the world, we've seen a real reduction in physical gold demand. So when the price correction in sort of Q2 of 2013 occurred, we saw this unbelievable spike in volume really all over the world. This year, numbers have come off a little bit, but if you were to compare where we were or where we are today to say 5 years ago, we're still seeing really good growth rates in gold and silver demand. When it comes to, I guess, mum and dad investors, SMSF trustees is a big part of our business as well. A lot of those people have already established a core position in bullion in their portfolios, and they did that a few years ago. So they're kind of waiting to see which way the market goes from here. I think they'll be very happy to buy more if we see prices back around the, say, 1200 US mark. Alternatively, they'll be very happy to buy more once prices get back above, say, $1,400, $1,500, because then they'll be really confident that this correction is over. A lot of people may not be aware that central banks were effectively net sellers of bullion for the better part of 20 years uninterrupted. So essentially from the late 80s all the way up until about 2009, on average central banks were selling 300 to 400 tons of gold a year into the market. And that was obviously a big part of why sort of prices were bottoming out in the late 90s. Over the last 2 or 3 years, they've actually turned net buyers and are on average purchasing around about 100, 125 tons of gold a year. That's excluding the People's Bank of China, who don't actually report their gold holdings and gold purchases on a regular basis. There's a good chance that they've probably been picking up a few hundred tons all by themselves every year alone. That would just be Chinese gold mining, which obviously isn't exported out of the nation. So I don't think central bank purchasing is necessarily something that's going to cause any sort of short-term volatility or price spikes or anything in the market, but it is a massive tailwind for higher gold prices over the coming years.